Friday's payroll is a first look at how the Doge and government streamlining may start to impact headline jobs numbers, and we'll be watching that very closely indeed. So it's another huge week for the US, culminating in another huge payroll Friday.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
So, we've had global trade, tariffs and geopolitical events all overlaying the macroeconomic environment at the moment and leading to the ever-complex financial backdrop. So what are we thinking from a global perspective next week?
Yeah, great question, Matt. It's certainly been another complex week indeed. Tariff rhetoric has returned with the restatement of the March the 4th deadline for 25% tariffs on Canada and Mexico, as well as an additional 10% on China from President Trump, in between receiving Macron, Starmer and Zelensky to the White House this week. But that tariff talk has really been the dominant driver of FX and FX volatility this week, with dollar strength the knee-jerk response despite the lower yield curve in the US and narrower yield differentials globally. Headlines around the March the 4th deadline will clearly continue to be significant. Indeed, negotiations up until that point are likely, and last-minute aversion is still possible, and therefore market pricing is therefore not ultimately that clear. Now, beyond tariff debates and discussions, we have China CAIXIN PMI for February on Monday. That'll be watched very closely to see whether there are any signs of stabilisation. That'll be watched very closely to see if the signs of stabilisation in the property market, some demand-focused stimulus measures, and also the China tech optimism has translated into a recovery in the forward-looking indicators in China. We get the final February readings of the Global Manufacturing and Services PMI, and that'll also be watched for further insight into global growth optimism, of course, with one eye on global geopolitical headlines throughout next week.
Now, after a relatively quiet week for Europe, next week brings the ECB meeting and thus focus back on the European economy. So how are we thinking about Europe and the ECB next week?
Yeah, good question. It's certainly a big week for Europe next week. This week saw the release of the minutes from the January meeting with notable reference to the nearing the point where policy can not be said to be restrictive and that there is some evidence that inflation risks are shifting to the upside. So clearly, some of the more hawkish members of the Governing Council and their rhetoric coming through into the minutes for the ECB. Structurally, we continue to see a weak trajectory for Europe, but we may be approaching the start of an important cyclical recovery, especially if a new government coalition in Germany can find support for constitutional reform of the debt brake and thus some form of fiscal expansion. Also in Europe, we get CPI for February on Monday, unemployment rate on Tuesday and retail sales on Thursday ahead of the ECB meeting, where we expect 25 basis points, which is pretty much fully priced by the market at this stage. Rather, we're going to be focusing not on the rate cut, but on the updated projections, particularly in relation to inflation around the forecast horizon, the language around the policy rate in relation to neutral, i.e. are we currently in restrictive territory or do we drop that comparison? And of course, on the balance of risks to growth and to inflation. Last time out, the balance of risks to growth were on the downside, but inflation was fairly balanced. It'll be interesting to see how they complete the square with that, a 25 basis point cut and the change in narrative around the restrictive nature of rates. But all to watch from the ECB this week.
Now, of course, the ECB will be important, but no doubt the US will dominate headlines and sentiment next week. How are we thinking about the US next week?
Yeah, that's right, Matt. It's likely that the US does dominate sentiment and positioning next week. Now, in this week's blog, we discuss a number of current discussion points in global markets, notably the emergence of question marks over the sustainability of US exceptionalism and the extent and duration of which the US can maintain above potential growth, which, set against tariff concerns and extreme positioning in the US tech, has seen equity markets weakening this week. Next week, we get ISM manufacturing and service sector activity. That's going to be keenly focused upon, particularly given the fact that the PMI, the closely related survey, pointed to a service sector index below 50 or in contraction. So that's going to be very closely watched on Wednesday of the next week. We get the ADP on Wednesday, trade data on Thursday, and trade data itself might be very interesting in that a decline in the trade deficit may be seen as a bit more of a positive for US GDP. But really, it's going to be all about non-farm payrolls. We've noted previously our concerns over the US labour market under Trump, particularly in terms of the impact of the likely removal of significant and consistent government hiring under the Biden administration. Friday's payroll is a first look at how the Doge and government streamlining may start to impact headline jobs numbers, and we'll be watching that very closely indeed. So it's another huge week for the US, culminating in another huge payroll Friday.
Fantastic. Thank you, Neil. A lot to be keeping an eye on in the week ahead. In the meantime, though, I think we have potentially a bit of a respite this weekend.
We certainly do. It's almost quite a disappointing weekend for sport this weekend. No Six Nations rugby. England play South Africa in the Champions Trophy cricket, but after defeats by Australia and Afghanistan, they're already out of the competition. We're still 2 weeks away from the Australian Grand Prix and the start of the Formula One season. It is, however, FA Cup weekend, so Palace versus Millwall, Preston versus Burnley, and City versus Plymouth, likely the pick of the bunch. And while we might be looking hotly ahead for payrolls next week, I shall be preparing for the other hotly awaited event this week, and that's Pancake Day on Tuesday by buying some flour and eggs.
Fantastic. That sounds like a plan. Thank you for joining us and outlining your thoughts on the week ahead. I look forward to you cooking pancakes next week.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, Eurizon SLJ Capital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.